Welcome today to Canadian Mortgage Weekly Live. Joined today with Sam Thompson, Canada's weekly live mortgage video news podcast. We're really pumped today because we're going to be talking about the 5 mortgage products that are impacted by yesterday's prime rate change. And I know, Sam, that was a pretty exciting day and announcement we had yesterday, wasn't it?
It was for sure. It was definitely interesting to get to cover the Bank of Canada rate announcement. There was lots of speculation leading up to it. So doing that live coverage yesterday was really fun to kind of see, you know, what the Bank of Canada decided. I know, again, there was lots of speculation, lots of buzz around the announcement.
There was a lot of speculation and there was a lot of buzz. Definitely. We saw a lot of articles coming out before the rate announcement, just talking about how it was a for sure thing at that point. And we really saw that come to fruition yesterday. So really excited just to go into some of these mortgage products. And people are probably wondering, how does this affect them today?
Yeah, exactly. I mean, if you caught yesterday's episode, you would know that the Bank of Canada had increased their rate, which we'll see that impacted on the prime rate. So it does affect, quite a few mortgage products, and it's something, again, like you're saying, to be aware of and to understand, what you might see a change in terms of payments or the rate that you're at.
For sure. So here on Canadian Mortgage Weekly, we're going to make sure we go through these mortgage products with you today, just to give you some idea of how it's going to impact you, and maybe also leave some anxiety for those of you that, because there are some mortgage products that will not be affected too. So if you're not on this list today, you're not affected, and there's a lot of you as well. So Sam, what would be the first type of mortgage products that would be impacted by yesterday's prime rate change?
Yeah, absolutely. So anybody who currently has a variable rate mortgage is likely going to see a change. Again, if you have signed up with a variable rate, over the long term, it's been proven and shown to end up paying less on interest, but you're likely going to be getting a letter from your lender indicating an increase in your rate, and you might see an increase in your payments for that.
That's correct. Yeah. So if you do have a variable rate mortgage, do give your mortgage professional a call to see how exactly that will impact you. But you will definitely notice a change. Another one of these types of mortgages is an adjustable rate mortgage, which is very similar to a variable rate mortgage, as you know, Sam. And if this is a type of mortgage you have as well, then again, you'll likely receive a letter from your lender just advising that how your mortgage is changing as well. So do also contact your mortgage professional to make sure that the way it's impacting you, you get a full idea of exactly the dollars and cents and how it will impact you there. What about HELOCs there, Sam? Would they be affected?
Yes, yeah. So anybody with a HELOC or a home equity secured line of credit, and also anybody with an unsecured line of credit, you will notice a difference in the payments and as the prime rate changes for those as well.
Yeah, definitely. For the HELOCs, typically we see it's a prime rate, and you have your rate move, which means your minimum payment will change. So for the client, if you're having a home equity line of credit, most likely, if you haven't even added anything to your balance, next month you'll see your minimum payment go up accordingly to that interest rate change. There's also unsecured lines of credit, and they're also going to be impacted by this prime rate change the same way there, aren't they, Sam?
Yeah, they'll be impacted the same way. We'll see again a payment increase, like you're saying, even if there's no additional funds added, and you're wondering why you're paying more on this monthly payment. It's because that prime rate has changed for those lines of credit.
That's great. So you're probably wondering, am I on this list? Because I haven't had my mortgage called. I have a fixed rate mortgage. Well, if you have a fixed rate mortgage, you don't really have to worry about having your mortgage impacted. Yesterday's prime rate change hasn't really affected fixed rate mortgages for those who have locked in and have a
Mhm.
contract going forward. Your rate will be honored and your payment's not changing. And that's part of the security that is from a fixed rate mortgage,
Mhm.
is that you do have that same payment throughout the entire term. But that's not the case for some other financing products. And that would be things like variable and adjustable vehicle loans. And those, because they fluctuate with prime rate as well, typically on those types of loans, the payment stays the same, but the amortization will change. So say if your rate has gone up, all of a sudden that car payment will just maybe continue on for a few months longer if the interest rates go up, because there'll be additional interest charged.
Mhm.
Um, what about some other products that would be affected, Sam? Are we missing any?
Yeah, of course. So anybody who does have a variable rate credit card will also be affected by this. Again, with the prime rate changed, a lot of variable rates are structured as either in addition to the prime rate or a discount from the prime rate. So anytime we see that prime rate change, it'll affect, the net rate or what the specific rate is for your exact product. So again, if you're anybody who has a variable rate credit card, again, you might see that rate changing as well.
Excellent, Sam. Yeah, definitely be aware of those. There are not many out there of the variable rate credit cards. So
Mhm.
if you are one of the few that have a variable adjustable credit card, this is how it will impact you. And then finally, just any products that really are tied to a prime rate and adjust to that prime rate will be impacted. We've covered the ones that I think will be impacted, I believe, for the most part. There are some specialized products that are tied to prime rate, but we're not going to go through every single one of them today. What we are going to go into, though, is the news. Let's take a look at that bond yield, Sam, because I know that bond yield's been moving up like crazy these last few months. We've seen fixed rates rise like a rocket ship. Prime rate just went up by 50 basis points yesterday. I
Mhm.
know, Sam, like we were talking about this earlier, that represents a 600% increase to the bank overnight lending rate from the start of the year to now, because that's gone from 0.25% to 1.5%. That's not the prime rate, that's the Bank of Canada overnight rate, but still 600%. That's quite a number.
It definitely is quite a number, especially also factoring in that we stayed at 0.25% for, almost over 2 years. So it's definitely a big shock for anybody who, again, was in one of those variable rates, had seen prime remain pretty consistent, to have such an increase over such a short period of time. Yeah.
Yeah, we'll have to keep an eye on this, but let's take a look at that bond yield, because with it being increasing, we may have seen a result to that tightening range that we were talking about earlier. I'm not quite certain if this is representing that, but we do see that that increase just in the last few days.
Yeah, exactly. I know that when we were tracking, we were noticing, amid a couple of peaks, it was going on a downward trend. But when we were looking at it earlier in the week, we had noticed, there could have been a potential for it to spike back up. And it looks like that's what the bond yield's done. Right now, it's sitting at 2.86. So it's almost breaking its previous high from a few weeks ago. So again, it'll be interesting to see, whether it can break that ceiling or again, whether it's just a spike within the tightening range. But yeah, definitely maybe a bit more unexpected as we were tracking it in a downward trend to see it spike up in just the last couple of days.
Yeah, definitely. We'll have to keep an eye on this trend. We were watching the tightening range, but we'll have to see. Is it going to continue going up from here? What will the sentiment be next week? Let's keep
Mhm.
an eye on this, and we'll make sure that we cover this next week on Canadian Mortgage Weekly. Now, we also cover the CDOR rate here on our show. With the CDOR rate, this represents the variance between prime and fixed. And if it's a good and competitive option to still go with the variable rate mortgage, I know once upon a time, I remember in my career, variable rate mortgages were virtually identical to fixed rate mortgages at a time. Why would anyone take variable when the fixed is available for the same rate to lock in? But when this variance is so large, are we seeing that variable rate mortgages are competitive? What do you think, Sam?
Yeah, absolutely. I think that we're still seeing that variable rate mortgages are a good option and are still a competitive option. Again, when we look at also the fact that prime has increased, looking at the CDOR rate and its variance from prime, it's still under that 2% mark, which is what we're looking for to give us an indication of, whether it's a viable option, whether it's an advisable option. And right now, this data is communicating to us that, variable still is a good option. And I know that we had commented when we had done our rate show yesterday that I think the approximate number of single increase or 25 base point increases, we'd still need about 7 for today's average variable 5-year rate to reach the average 5-year fixed rate. So keeping those things into consideration, I think it's still indicating that variable is a good option still.
Okay, that's great news. And for any of you that are variable rate mortgage holders, if you are looking at a variable rate, there are some additional benefits with taking a variable rate right now. In addition to what Sam's saying, so definitely give us a call and we can go over those benefits with you guys. Going over to the next item there, I think what we talked about is the next Bank of Canada announcement. And we just had one there yesterday. It was a pretty exciting day. Another supersized rate hike by the Bank of Canada. The overnight rate is should be 1.5% there. Right. Up 600% from 0.25%. So definitely check out our coverage yesterday from our show. And we'll make sure that we've covered all the items there yesterday on the Bank of Canada announcement. And as a reaction today, I'm thinking that it was an expected announcement. I think the Bank of Canada announced what was expected by the media.
Yeah, exactly. Many of the sentiment in the articles that we were reading and seeing from economists was expecting a 50-point basis hike, but definitely stay tuned and join us. The next rate announcement is going to be July 13th. And I know that there was, again, many economists that were predicting not just a single, supersized rate hike for June, but also a following one in July, giving us, 3 back-to-back rate announcements with a 50 basis point increase. So the next announcement is going to be definitely interesting to see, how the Bank of Canada responds, as well as the release of their monetary policy, which is always really good to get some more insight on, some future policy or future rate announcements from the Bank of Canada.
Okay. Yes. Join us for our next video too on the Bank of Canada announcement. When is that? July 13th?
July 13th, yes.
Okay, lucky 13. So let's look at the next data point we track here on Canadian Mortgage Weekly. Not a very exciting point this month around. We have another decline in home price on the national side. I know that we've been seeing a lot of softening in the market, but the softening isn't really anything that is out of the normal. It seems, Sam, that it's just the market where there was no listings almost seems to have had the regular amount of listings come in. And now it's more of a balanced market. Almost, it seems like there's some articles even indicating that we might be headed into a buyer's market pretty quickly.
Yeah, we've definitely seen a transition from, where the market was at in January, where we saw that, house price averages were, well over 800,000. You can see the spike on the graph there.
Yeah.
But we have definitely seen, a number of changes to how the market's structured. Like you're saying, there's more listings, conditions are coming back. I think there is definitely entering a balanced market for sure. And again, yes, some articles indicating we could be entering a buyer's market.
Yeah.
Hmm.
What are your thoughts on that?
Yeah, I mean, I think we definitely could see it depending on where we ended off, May, and tracking where these house prices are headed, because typically we do track a bit of a dip in the spring, where houses do go on sale. Also, as we're getting further out of COVID and the weather's getting a bit warmer, more people are maybe thinking about moving, which would help for those listings. So we'll have to track and see if it is just a sale point, where the market is just kind of readjusting, or if we do see, the scales tip a bit and it does impact, and become more of a buyer's market.
Yeah, great point there, Sam. And yeah, if you have any other questions about specific data in your local market, don't contact us about it. Contact your real estate professional, and they can really guide you with your local data and show you exactly how and when buying a home makes sense for you. But yes, looking forward to the next month's data. I think we're about, 2 or 3 weeks away from releasing the next month's data here on Canadian Mortgage Weekly. Yeah, well, that's great. It's always good to go over these items and data points with you, Sam. I know that you've been in the mortgage industry now for over 2 years. You moved here from Ottawa, and yeah, been working now with Mega Mortgage just over 2 years, living in Barrie with your wife and pup. So how are you doing today? Great to have you on the show. Thanks for being here.
Yeah, thanks so much for having me. It was good to cover some of the follow-up from yesterday's rate announcement, and kind of see, where things are headed. It's always interesting looking at all these data points and trying to get an idea of where the market's headed. And it's always good to do it with you, Joe. You've been in the industry for over 11 years, as a mortgage broker yourself, living up in Aurelia. So thanks again for having me on today's episode. Yeah,
it's great. And with Canadian Mortgage Weekly, just so everyone's up to speed on that, and thanks for that, Sam. That was really nice. When we're going into June this month, we're going to be going and talking about mortgage products. And for that, we have an exciting month lined up for you. These aren't just the regular mortgage products that you get. And when we're talking about regular mortgage products, that's the kind of mortgage that you or I would get when we walk into our bank and simply want a mortgage to buy a house. There's that type of mortgage. There's a type of mortgage where we go to refinance our house. There's that type of mortgage. But there's also other types of mortgages that really other banks don't talk about. So Sam and I are going to be sharing those with you all throughout June. Join us for next week's episode, episode 82, where we'll talk about cashback mortgages. Really exciting. These are all different types of cashback mortgages. Sam and I will cover those off next week for episode 82 here on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. Don't forget to like, comment, and share, and we'll see you next week.